So hi friends, welcome back. So we are in accounting standards revision class. We are done with 7. Quickly, we'll run through 9. We'll not spend much time on 9. 9 is a simple standard, but multiple times questions are asked from this exam. Basically, accounting standard 9 covers 3 areas. One is sale of goods, one is sale of services, and one is usage of enterprise resources by someone else that gives the enterprise interest or dividend or royalty. So you're using my technology, giving me royalty. You're using my capital in terms of equity. I have invested equity in your company. You're giving dividend to me, or I have given loan to you. You're giving interest to me. Okay, so all these 3 are incomes. Royalty received is an income. Interest received is an income. Dividend received is an income. Okay, so goods sold, that is revenue. Then services rendered, that is revenue. Now, this particular diagram given in ICI study material explains the whole revenue recognition in single diagram. Now, there are 2 aspects from where questions are asked in the exam. Majority of the questions asked from AS9 is uncertainty in collecting amounts. I've sold goods. I need to get 100 rupees from you. Now there is significant uncertainty associated with this collection. What am I supposed to do? Should I create a provision or should I reverse the revenue recognized? What am I supposed to do? That is major part of the standard. Okay, from the point of view of examination. Now you can see in sale of goods, when the revenue is recognized, look here. Transfer of significant risks and rewards. When can you say that the goods are, the ownership in the goods are transferred? So now look here. Normally, in case of sale, revenue is recognized when significant risks and rewards associated with the ownership of goods are transferred. Oh my God. This is the language. This is the language. Kirti is asking, sir, please cover 19. Okay, Kirti, we'll do one thing. After this, I'll cover 19. Okay. 19, I do consider 19 is an important standard. Many students have doubts in 19. 19 will clear. Not that you asked me, even I believe 19 is important. So we'll deal with that. Okay. Now, answer when this happens. When this happens, normally on physical delivery of goods, the above event happens. But there are how many exceptions to this rule as per AS9? You tell me, there are how many exceptions? Normally on physical delivery of goods, risks and rewards associated with the goods will be transferred by the seller to the buyer. But there are certain exceptions. How many exceptions are there? You tell me. How many exceptions are there? You tell me. 3 exceptions. 3 exceptions. What are the 3 exceptions? You know, one is goods sent on consignment. Here, what happens? You know, goods delivered, but ownership not delivered. Do you agree with me? Hello, hello, hello. Do you agree with me? In consignment, what happens? I have sent the goods to my agent. Goods gone. Physical delivery is given. Possession changed, but ownership has not changed. So no sale, no sale. So physical delivery of goods happened. Ownership is not transferred. This is one. 2. Goods sold on sale on approval basis. Sale on approval. That means I have given goods to you. Okay, Suresh came to me and said, Pavan sir, can you sell 100 units of this material? I said, okay, take 100 units. He said, but I will use this or I will test this. If they are good, then only I will buy. Otherwise, I will reject. Okay. Okay, no problem. I used to give one example for this, okay? A very simple example, but very effective example. Imagine I have a ready-made textile shop and Deepak is my regular customer. One day Deepak came and said, hey, Pavan, day after tomorrow is my birthday. I want to buy one nice jeans pant from you, dude. That should look cool. I said, okay. So I have given 4 jeans pants to him. And he said that, hey, this second one I like, I want to try. Can I use trial room? I said, hey, I'm so sorry. Renovation is going on. So trial room is not available now. Then Deepak is my regular customer. Then Deepak said, if that is the case, Pavan, would you mind? I'll take this 2 jeans to my home. I will try, take one. Second one, I'll give it back to you tomorrow or day after tomorrow, whenever I come on this road. Will that be okay? I said, of course. Of course. That is sale on approval basis. I cannot record sale now. Sir, Deepak has taken 2 pants, sir. Record journal entry. No, I cannot. Till the time he confirms. Goods sold on sale on approval basis cannot be recorded. Goods delivered, but ownership not delivered. Till the time Deepak calls me and say, hey, Pavan, I liked the second jeans, that ice wash is there, no denim wala, that I am taking. The other jeans I'll give tomorrow. Okay, that is confirmation. Another classic example is Tribhuvan. Tribhuvan Das Beams is a very TBZ kind of jewelry stalls. It can be any jewelry stall. Imagine there is one very high net worth individual, like, Mukesh Ambani family or politically influenced family or locally, very strong businessman. They called and said, hey, my wife wants to buy a diamond necklace, but she cannot come. Can you send some 4 or 5 samples from which she buys one? Which happens. Even in one of the videos, Shewat said, whenever Sachin Tendulkar wants to shop, buy something, he'll call straight to the storekeeper and he will not go to the shop. The whole shop will come to Sachin's house. Can you believe the whole shop stock, whatever is there, will come to Sachin's house. So in Sachin's hall, all this will be displayed. Sachin's family members will decide, I want this, remaining suited. This is sale on approval basis. Goods delivered, but ownership not delivered. Third one is very, 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 very important thing. Goods sold, but physical delivery delayed due to buyer's request. What? Buyer's request. On this, there are many questions given. So on Jan, first A entered into a contract with B to sell goods worth 1 lakh. Deliveries are to be made in 4 monthly installments. Jan, 25,000 goods were sent. February, 25,000 goods were sent. In the month of March, buyer called the seller and said there is some fire accident, or because of some water leakage, the godown is under renovation. He cannot accept the delivery. He requested the seller to send the goods only when he calls and confirms. So March and April deliveries were held back by the seller. How this is to be accounted for? This is the drama. 3 questions asked 3 times. Same question asked. Once they said 1 lakh, 25,000, 25,000, 25,000, 25,000. Once they said 4 lakhs, 1 lakh, 1 lakh, 1 lakh, 1 lakh. Story remains same now. The sale happened on the date of entering into sale itself. So here, goods not delivered, but ownership transferred. Goods are still in my godown only, but goods are sold. They are your goods. You asked me, Pavan, keep these things here. I said, okay. Consideration paid or not doesn't matter. Consideration paid or not doesn't matter. It could be credit sale, it could be cash sale. But goods which are ready, appropriated, identified, specific goods made aside, assigned for the purpose of, earmarked for the purpose of delivery, but buyer said, I will take it later. So what happened? It is simple. I went to a medical shop and I asked, Anna, I want a dolo sheet. He said 30 rupees. I gave 30 rupees. I took a dolo sheet. Then instead of putting it in my pocket, I said, nah, just keep it here on this table. I'll come back and I'll take it. Okay. Why? Because imagine some drama. Imagine my bike or my car is on the road and traffic police big jeep came. So I am scared. I said, oh, no, wait. Come. Did I buy the goods? Yes. Did I pay money? Yes. Did I take the delivery? No. That dolo sheet is there only. The dolo sheet is there only. Now I went, I ran and I took my bike, without those people taking my bike or car, because it is no parking. I ran away. I did not come back to take this medicines. Now, can the shopkeeper pass the journal entry for sale? The answer is yes. He transferred goods. He transferred the delivery of goods. That's it. But Pavan sir, you did not take the medicine array. That is a different story. Sale over. Now, after 4 days, I went back and I said, no, I'm so sorry that day when police came. So I ran away because this is a no parking area, towing. So unnecessary headache. I went home. I thought I'll change pajamas and then I'll come by walk on foot. Then I realized one more crossing sheet is there at home. I thought, okay, anyway, no problem. Afterwards, I'll take. So I came after 4 days and I give. After 4 days, he will give the medicines. Delivery will happen after 4 days, but sale happened already. This is given in your examination questions. This one, problem number 6. 3 times same question is asked. So can someone read this question, please? Kirti, can you read this question? Okay. Anyone, can someone read? You have stolen my heart. Kirti is saying, sir, I'm in library. You went to library, you are studying it, you're attending my class. I'm sorry. Hey, some other idiot. Read.
Shall I read, sir?
Read.
A Limited enter into a contract with B Limited to dispatch goods valuing rupees 25,000 every month for 4 months upon receipt of entire payment. B Limited accordingly made payment of rupees 1 lakh and A Limited started dispatching the goods. In the third month, due to a natural calamity, B Limited requested A Limited not to dispatch goods until further notice, though A Limited is holding the remaining goods worth rupees 50,000 ready for dispatch. A Limited accounted rupees 50,000 as sales and transferred the balance to advance received against sales. Comment upon the treatment of balance amount with reference to the provisions of Accounting Standard 9.
That's all. So now you tell me, what is the amount of sale to be recognized?
Total amounts.
1 lakh is only some student will say, Pavan sir, I'll do one thing, Pavan sir. 50,000 goods sent that I will write as sale. Remaining 50,000 goods have not yet delivered. So I'll take it as an advance. So they'll say, I'll write cash account debit to sales 50,000, cash 100,000. To sales, I'll write 50,000 to advance. 50. This is what I write, Pavan sir. No. The journal entry should be cash account debit to sale. 100, 100. Khatam. That's all. This is one question. Then majority of the questions from this area, as I told you, is uncertainty in collecting revenue. For example, imagine, I'm running a college or a school or a CA academy. You joined, in my CA academy. So you have filled one application form. On the application form, it is mentioned that your next term fee is payable on so and so date. If you fail, penalty of 500 will be levied. So you have to pay on that day. If you are not paying on that day, 500 rupees will be levied. Imagine you did not pay on that day. Can I recognize that 500 rupees as revenue? Because you signed the contract, you signed the application form, no? Admission form you signed. So you need to pay 10,000 to me. If you fail, you need to pay 500 extra penalty. 10,000 I'll recognize because you joined the class, you are continuing. But what about that 500? Will I be able to collect the 500? Should I record it as a revenue on 31st March? Because you have to pay me on 25th March. You failed. So on 31st March, I have the legal right to collect that 500 rupees also. So guys, tell me that 500, can that be recorded as a revenue? Can that be recorded as revenue? Tell me, I want answer from you. Yes, 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 yes. So the chat box is flooded with yes. What about others? Can I get more response? Yes. More response, more response. Everybody is saying yes, not even a single no I can see in the chat box. Can someone please, for my sake, write no? Someone say no. Ah, very good. No is the answer. Now, how many no's are coming? See? No is the answer. It is not about the legal right to collect. It is about the business practice. Do I do that? If it is a credit card company or if it is a loan, EMI you have to pay, you did not pay, so you need to pay penalty. Financial institutions collect it. Credit cards collect it. They actually collect it. Schools and colleges, if you look at it, you know, when after 1 week, if the student comes to me, for example, Amrita came to me and said, Pavan sir, last month I have to pay 10,000 Pavan sir, but there was some contingency. I'm so sorry, 10,000. Please take this Pavan sir. If she tells me that, do you think in the industry I'm operating in the industry, education, service provider, in the industry I'm operating, do you think I'll say, no, legally you have to pay another 500 rupees also? Can I tell that? Can I collect that 500? What impact it creates on my business? Maybe I'll include it as a point in the admission form just to make students pay on time, but I will not collect it. That damages my reputation. So based on the past experience, industry standards, intention to sue and collect, if you are not giving that 500, will I go to court? Will I go to police station to collect it? Credit card company will go to court. For that penalty, they'll give you legal notice because they have in-house lawyer. For that 500 rupees also, one legal notice will come if you are not paying. So this is the next bunch of questions. There are so many questions falling in this category. Okay. So Yoshna Borana, can you read this? Question number 3.
SCL Limited sells agricultural products to dealers. One of the conditions of sale is that the interest is payable at the rate of 2% per month for delayed payments. Percentage of interest recovery is only 10% on such overdue outstanding due to various reasons. During the year 2016-17, the company wants to recognize the entire interest receivable. Do you agree?
Tell me, madam, do you agree?
No, only 10%. For that, we can create a provision.
No, this is your experience. Your experience says that if you have, say, for example, 1 crore rupees of this type of revenue to be collected, which is actually penal interest penalty, 2% for delayed payments, it is 1 crore rupees. Your past experience says not even 10% recovery is there. Many people will come and say, hey, no, I couldn't pay the original amount only. How can I pay penalty and all? Take this original amount. You will take it because your recovery is only 10%. So better don't recognize any revenue out of this penal interest 2%. These will be recorded as and when collected. So revenue recognition will be based on sale. Revenue recognition cannot be based on accrual. Now, sale means, sorry, receipt. Revenue recognition happens based on receipt basis, not on accrual basis. And I'll give you one beautiful example here. Guys, tell me one thing. Do you think accounting standard 9 is applicable for banking sector? Do you think AS 9 is applicable? Hello, yes or no?
Mm,
No.
No.
Everybody is saying no. The answer is yes. AS9 is applicable to banks. But of course, now banks are in the zone of Ind AS. That is a different story. But AS9 principles are applicable to banks. Why do you think interest on non-performing assets will be calculated and taken to revenue? Interest on NPS will be taken to revenue only on cash basis. AS9. Interest on regular accounts, accrual basis. Interest on NPA, cash basis. Why AS9? When there is a significant uncertainty. Of course, RBI also gave guidelines, but RBI guidelines and AS9 principles are same. So if there is any revenue you have already recognized or you are expected to receive that, but the person is not paying. The person is not paying interest. How can you recognize? You have to keep it in a separate account, like suspense account, keep on accumulating till he pays. Or you have attached the property, you sold it and you recovered. Then you record interest income. So here also this 2% penal interest, whatever the company SCL Limited, is supposed to collect. Because of the past experience, only 10% outstandings will come. You should not recognize revenue. You should not recognize revenue. So to the extent of what you are confident that you will collect. For example, Pavan sir, total penal interest is 2 crores, Pavan sir. 25 lakhs companies confident of collecting. Can I record this 25 lakhs? The answer is yes. So total 2 crores. You accumulated 2 crores, that penal interest, of which only 25 lakhs you are confident of collecting. This 25 lakhs can be recorded on accrual basis. Remaining 175 lakhs, 1.75 crores should be recorded on cash basis. That's all. This is also same. Arjun Limited sold farm equipments through dealers. One of the conditions is blah, blah, blah. Same copy paste, same copy paste, same copy paste. There is one question, I think, Sarita Publications, which is important. Other than that, we are done with this. If Sarita Publications is there, we'll spend. Sarita Publications. Yes, this is very, very, very interesting question. Can you read this problem?
Sure. Sarita Publications publishes a monthly magazine on the 15th of every month. It sells advertising space in the magazine to the advertisers on the terms of 80% sale value payable in advance and the balance within 30 days of the release of publication. The sale of space for March 2014 issue was made in February 2014. The magazine was published on a scheduled date. It received 2,40,000 on 10th March 2014 and 60,000 on 10th April 2014 for the March 2014 issue. Discuss in the context of AS9 the amount of revenue to be recognized and the treatment of amount received from advertisers for the year ending 31/3/2014. What will be the treatment if the publication is delayed till 2nd April 2014?
Now, this is one part of the question, and this is the second part. This is the second part. Beautiful question. Originally asked at CA final level. Last time one student was saying, Pavan sir, all the questions came from your material only, Pavan sir. All the questions came from your material. And there are so many faculty who say all the questions came from my material. But boss, at the end of the day, all these are problems compiled in ICI study material, practice manual, RTP, MTP. We have not manufactured questions. We have not manufactured questions. So all the questions have come from ICI resources. Naham karta, Hari karta. I am not the person. Lord Hari is the person. So I am not the person. ICI is the person. So this question is, has the quality of appearing again in CA intermediate exam, because this is originally a final question. So look here, what they are saying, monthly magazine. Okay. they will publish magazine on 15th of every month. Okay. They sell advertising space, 80% payable in advance per advertisement, 20% on release of publication. Okay. So they sold advertisement worth 3 lakhs. So on that 80% is 2,40,000 that they received on 10th March advance. 15th March is the publication date. 5 days before I asked pay 2,40,000. Okay. After publication, pay me remaining 60,000. Okay. So in first situation, I have published the magazine on the expected date. I received 2,40,000. I have to receive another 60,000. What journal entry I'll pass? Cash account debit 2,40,000. Debtor account debit 60,000. To sale revenue. To advertisement income or advertisement revenue, 3 lakhs. This is the journal entry I pass. Correct? But what will be the treatment if the publication is delayed till 2 lakh until 2nd April? On 31st March, you received 2,40,000. But publication has not happened. Now you should connect this to the core principle of revenue recognition from the rendering of services. There are two options given to you. One is proportionate completion method. Second one is completion method, full completion. In case of a single event, in case of service, in case of single event, you can recognize revenue only on performance of the obligation. What is your obligation? Putting advertisement in your magazine. That is your obligation. That is called performance obligation. When the obligation is performed, you can recognize revenue. Before that, no, you cannot. Sorry. You cannot recognize. So in this case, if this happens, 2,40,000, whatever you have already received, shall be shown as an advance. You cannot recognize revenue. So in this case, journal entry would be cash account debit 2,40,000, debtor account debit 60,000, to revenue 3 lakhs. In this case, cash account debit to advance received against advertisement. Revenue received in advance, 2,40,000. So you understand this? Note it as important problem. I have given journal entries also. This is the answer I have written. This is not ICI answer. ICI answer you will not understand. That is the reason I redrafted in terms of journal entries. Ta-dan, ta-dan, ta-dan. Then all others are normal problems. This problem number 11 also, I have made this problem. According to me, beautiful problem. Now you may say, you have written one problem and you'll say that is a beautiful problem only. X Limited deposited 1 crore in ICICI Bank in a fixed deposit where the principal amount will be doubled in 6 years. At the end of 6th year, X Limited will receive 2 crores. The accountant contended that the amount of interest, that is 1 crore, is to be credited to P&L account of 6th year, whether the contention of accountant is correct. This is a problem manufactured by me. I am the father of this problem. But 90% all the problems are ICI problems. So Yoshna is saying, no, the contention of accountant is wrong. What about others? Sale of goods. Risks and rewards associated with ownership or transfer. Sale of services. Single performance obligation. Completion. Multiple performances. Proportionate completion method. 3. Interest based on time proportion. Approval. Dividend when the legal right to receive has been crystallized. Royalty based on the agreement. Accounting standard 9 is over in 5 sentences. Sale of goods, ownership transferred. Sale of services, single performance obligation, full completion method. Multiple performance obligations, Proportionate completion method. Interest accrual basis. In proportionate accrual basis. Dividends, legal right to receive. That means AGM or announcement. Fifth one, royalty based on agreement, accrual. This is interest, time proportion basis. What you need to do, what you need to do, you need to solution, you need to calculate 2 crores is equal to 1 crore into 1 plus interest rate whole power 6. Now you should calculate in reverse working that interest rate. A is equal to P into 1 plus R whole power N. Now this interest rate is there, no? Do you know what it is? IRR. In this equation, that interest is IRR. So you have to calculate 1 crore into that IRR rate every year, and you need to take it to P&L. That is the answer. That's all, ladies and gentlemen. The contention of accountant is wrong. 17, one student is asking 19 on public demand. So in 19, only 2 types of problems are available. In 19, how many problems are available? 2 types of problems. What are they? Accounting in the books of lessee, accounting in the books of lessor. Financial lease, operating lease. What is finance lease? What is operating lease? What is lease premium? What is guaranteed residual value? What is unguaranteed residual value? All these things are given there. And the jargon is so complex that you feel you're not understanding anything. But trust me, I'll show you how to solve problem in 3 minutes. 3 minutes. 4th minute is a sin. Entering into 4th minute when you are solving these problems is a sin. 3 minutes, I'll show you how to solve the problem. Both lessor accounting I'll show, lessee accounting I'll show. Because basically I'm a finance guy now. Originally, finance lecturer. After that, it came to FR, no? So this is pure finance. We can play football with it. Okay, sure, we'll see. So, accounting for finance lease in the books of lessee. 2 things remember. 1, on the date of inception of lease, that means on the day when you are signing lease agreement, lessee should show the asset in his books. This is called right of use asset, ROU, right of use asset. Is this my asset? No, I have taken it on finance lease. I can recognize this in my books. Classic example for substance over form. Classic example for substance over form. The asset is not mine. The asset is your asset. Kirti has a lorry. I have taken lorry of Kirti for 10 years on finance lease. If this passes the test to be finance lease, like, the present value of the lease payments, minimum lease payments, she calculated, and it is more than the cost of the asset. So these kinds of some tests are there, test 1, test 2, test 3. You don't worry about this. In the problem, they'll clearly mention that it is a finance lease. So now what am I supposed to do? Can the asset be recognized? See, you tell me, if you buy asset on payment of cash, asset purchased and cash paid, 100 rupees. What is a journal entry? You tell me. What is a journal entry? Asset account debit to cash account. Correct. 100. Okay. Now, asset purchased on credit from X Limited. 100. What is a journal entry? Asset account debit 100 to X Limited 100. Correct. So when you take the asset on finance lease, there is no difference. This is same, dude. When you take asset on finance lease, it is same. When You take asset on finance lease, journal entry should be same, but asset is not my own asset. So I will show it as leasehold asset, lease asset. I have 10 lorries, but out of 10 lorries, 9 are mine. One is on finance lease. So I have to show it separately as lease asset. Two, now that X Limited is not the creditor who sold goods to me or assets to me on credit basis, rather he's a lessor. So lessor account. Who is lessor? X Limited only. I'll put 100 rupees, 100 rupees. But Pavan sir, shall I put 100 here? No. You cannot put 100 there. But Pavan sir, the cost of the asset is 100. Cost of the asset is 100. Can I put 100 here? No. You have to calculate what is the cash down payment, cash purchase price of the asset or present value of future lease payments. In this two, whichever is lower, that only you can put here. You cannot put 100 here. You can put either cash purchase price or present value of future lease payments, whichever is lower. Why? Simple. I bought this asset from Kirti and I said, Kirti, I'll pay you 24 installments. She said, okay, but that 24 installments present value is becoming, say, for example, 1,000. In the market, I can buy this for 900 only. In the market, it is available for 900, but I am paying 1,000 rupees. The present value of my future payments to Kirti will be 1,000 rupees. But still, the standard says, "Arey, idiot, total is 900 only." Because you are paying 24 installments, Kirti is exploiting you. He's taking so much of interest. That is the reason this has become 1,000. So I should recognize this at 900 only. You understand? So cash price is 1,000. Present value of cash price is 900. Present value of future payments is 1,000. So whichever is lower, I have to record the asset. You understand? Now look here. This problem. So can you read this problem, please? Can someone speed? Kirti, can you read this problem? Someone read it.
X Limited took a machine on 10-year finance lease. It is required to pay a lease rental of rupees 60,000 per annum, together with 5,000 for other services. The implicit rate of interest of X Limited is 10%. The present value factor 10% for the period of 10 years is 6.145. Find out the amount of lease liability at the inception of the lease. Also give the treatment of rupees 5,000 payable by X Limited for the other services. Future value of the asset on the date of lease is 3,85,000.
Super problem. This is also manufactured by me. This is not ICA study material problem. There are few problems where, we create to enable the students to understand the concept. 5,000 is there, no? For other services, this is not part of the car. For example, you bought car and you bought some maintenance service. Like, you have bought a laptop and you have bought some other service. So this is the payment made towards acquisition of asset. This is for service. This 5,000, take it to P&L account. There is no other treatment. You bought some service, take that 5,000 to P&L. Don't even speak about this 5,000 in AS 19. There is no AS 19 for this 5,000. But I will pay 60,000 per annum for 10 years. And the implicit rate of interest, which is nothing but IRR of the lessor, is given as 10%. First, we calculate implicit. First, we consider implicit rate of interest, which is IRR of the lessor for lessee accounting. Because see, for example, I am a salaried individual. I took loan from ICICI Bank. I will not have any interest rate. No, whatever ICICI Bank asks, I will pay. So ICICI's IRR is relevant for accounting in the books of Pavan. Makes sense? Now, Pavan sir, you took a loan from, say, for example, Deepak. He gave 1 lakh rupees. You gave 25,000, 25,000, 25,000, 25,000, 25,000. So you paid 1,25,000. He gave you 1 lakh. And there is no interest rate spoken between you two guys. But though there is no interest rate, there is interest. No. Now I have to calculate my cost of capital to do accounting. If I'm taking money from ICICI Bank, ICICI Bank said, Pavan, our IRR is 9.75%. Okay. Then Pavan will do accounting at 9.75, which is the lessor's implicit rate of interest, which is IRR. I have shown you how to calculate IRR also in problem number 1. But if IRR from lessor perspective is not available, if IRR from lessor perspective is not available, then lessee's weighted average cost of capital should be the basis. Okay, now already 10% is given, 10 years, 6.145 is also given. Now you tell me 60,000 into 6.145, how much?
$3,68,700, sir.
What is that? Present value of future lease payments, 3,68,700. What is the fair value of asset? 3,85,000. So if I buy today in the market, the fair value of the asset is 3,85,000. If I buy it on lease, I'll have to pay certain future payments, the present value of which is 3,68,700. So my asset and liability, I'll create one asset today, asset account, debit to liability account. This is the journal entry. What is asset? Leasehold asset. What is liability? Lessor. I need to pay money to lessor. So asset account, debit to liability account. How much should I write? 368,700. So do you think it will take more than 3 minutes of time for you to solve this? Asset account debit 3,68,700, liability simple. 60,000 they have given. 60,000 into present value annuity factor. Then compare with fair value. Pass the journal entry. That's all. This is the journal entry. Leasehold asset account debit to lessor. Asset account debit to liability. Expense for 5,000 will be charged to P&L. So this is step 1. There is one more problem in lessee accounting. Lessee accounting, 2 models. Lessor accounting, 1 model. That's all. Then calculating this implicit rate of interest is sale and lease. All these are banana small portions, but ICI will put that in a magnifying glass so that you will be scared. Guaranteed residual value, unguaranteed residual value, sale and lease back, finance lease, operating lease, lessor, lessee, all nothing will be there. So you understand this one, this journal entry is over. Now, Pavan sir, I took this asset 3,68,700. Okay, I have taken this asset on lease. Then every month I'll be paying 60,000. So at the end of first year, 60,000 paid. At the end of second year, 60,000 paid. At the end of third year, 60,000 paid. At the end of fourth year, 60,000 paid. Like that, I am paying for 10 years. So step 1 is this. On the date of inception of lease, lessee should show show it as an asset and a corresponding liability at lower of fair value and the present value of minimum lease payments. So this is over. 2. After that, you will pay 60,000. No, that should be split between that 60,000. You have to cut that into 2 parts. You tell me what are the 2 parts. Lessor is paying 60,000 every month or every year. That should be cut into 2 parts. What are the 2 parts? You tell me. Hello, what are the 2 parts? 1, interest amount, which is called finance charge. Interest amount, finance charge. 2, repayment of principal, interest and principal. Simple. Interest goes to P&L account. Principal amount goes to balance sheet. In balance sheet, you will reduce the liability. That is your second principle. Lease payments to be apportioned between finance charge and reduction of outstanding liability. Finance charges to be allocated to periods during the lease term so as to produce a constant rate of interest on the remaining balance of liability for each period. Pawan sir, what is the meaning of this? EMI, IRR calculation and EMI. That's it. Okay, then depreciation will be provided. Okay. In this question, I have shown problem number 1, lease payments 50,000. Period 5 years, guaranteed residual value 25,000, unguaranteed residual value 15,000, fair value at the beginning of lease 2 lakhs, calculate implicit rate of interest. So if you look at it, we calculated present value of cash flows at 2 rates. One is 10%, one is 15%. Then I applied interpolation formula. If you look at it, this is your, in your financial management, what do you call it? In your financial management, what do you call it? Here, implicit rate of interest is nothing but internal rate of return. So you have calculated 2 present values, one positive, one negative, and you can calculate IRR from that. That's it. Okay, now read next problem. Yoshna, can you read next problem, please?
Yeah. X Limited took a 7-year finance lease under which the annual lease rental has been fixed at rupees 1,20,000. The implicit rate of interest has been estimated at 11%. Find out the finance charge for different years. Fair value of the asset is rupees 6 lakh.
So what will be the first journal entry? First journal entry is asset account debit to liability account. Lease asset account debit to lessor account, correct? How much? Present value of lease payments or the fair value of the asset, whichever is lower. Fair value of asset is given 6 lakhs. So I have taken A, fair value of asset 6 lakhs. Present value of minimum lease payments. So for 11%, for 7 years, look at the present value table. Present value annuity factor is 4.7122. That will be given in the question. Or you can calculate it with your calculator, or you can use present value tables. So 1,20,000 into 4.7122 comes to 565,464. 5,65,464. Whichever is lower. So this one. So what will be journal entry? Leasehold asset account debit to lessor account. This, up to this, everybody understood? Hello. Tell me fast. So this, is it clear? This is nothing but the previous question, no? In previous question, we did same. Now, this 1,20,000 will cut it in interest amount and principal amount repayment. How? See this? Up to this, we have to prepare a table like this. Year, amount outstanding at the beginning of the year. Here you will write journal entry amount. Whatever you have recognized journal entry, no, that is your initial liability, no, opening liability. So you will write here. Then on opening liability into IRR, this is opening liability into IRR 62,201. Now this 5,65,464 into 11% is this amount. Pavan sir, current year it is 62,201 interest paid. Correct. But Pawan sir, I've paid 1,20,000. No? Yeah. What is the balance? Simple. Principal amount. Someone is saying looks like hire purchase. Same. There is no difference. So principal amount. So take opening, subtract this amount, it will become closing. So if you are using Excel sheet, or if you are using, your notes and calculator, it is like here, opening liability, finance charge is equal to opening liability into IRR, which is 11% here. Then lease rent paid, then principal, then closing liability. Okay, so we'll take here 1, 2, 3, 4, 5. Opening liability 565,464. It is this into 11%. It is 1,20,000. It is total 1,20,000 paid minus finance component is principal. closing liability is opening liability minus principal. Next year opening is equal to previous year closing. Okay. This one. Ta-dan, ta-dan, ta-dan. Somewhere something is wrong. What is it? Is it 11%? Correct. Why opening liability? Where is the mistake?
Sorry.
Huh? Six years, sir.
Sorry.
Oh, is it 6 years? Okay, okay. I don't know. Then we'll write 6 also. 7 years, sir. How many years problem? It is 7 years problem. Okay. ₹1 difference. Oh my God, Pavan sir, ₹1 difference. Pavan sir, what to do? Oh my God. Pavan sir, 0.93 has become ₹1, Pavan sir. So guys, do you understand how this table is made? Hello, response. Now, for this ₹1,20,000 paid, tell me journal entry. Can we pass a journal entry for this 1,20,000? So to whom it is paid? It is paid to lessor. Okay, why it is paid? This is finance component, finance charge. This is principal. So cash 1,20,000 is paid now. So can I say lessor account principal 57,799, finance cost, which is interest 62,201, to lease rent, which is principal plus interest, EMI, 1,20,000. Next second, you need to pass another journal entry, profit and loss account. Voila. Debit, interest, 62,201. Hey, to finance cost, interest, 62,201. Next minute, you need to pass one more journal entry. Depreciation account debit to lease asset. So in your balance sheet, what happens, in your balance sheet, here liabilities rupees, assets rupees. Here lessor is one liability. Lessor is one liability. Here lease asset. So this is rupees X. This is rupees X. Lessor account minus year 1 paid principal, minus year 2 principal, minus year 3 principal, up to so on year n principal. When you subtract, this X becomes 0. Lease asset X rupees minus first year depreciation, minus second year depreciation, minus third year depreciation, and so on up to nth year depreciation, it will become 0. That's all. So same day you are creating one asset and liability with same rupees, but this is discharged in different amounts. This is amortized in different amounts over 7 years. N is same. So nth year, it will become 0, 0. Today, X rupees, same amount. 7th year, 0, 0. In between, there can be difference. Because you are amortizing that at 11%. Depreciation may be straight line method. You understand? Simple accounting. So are we done with this problem? Problem number 3, you understand how we recognized asset and liability. Then how we are doing accounting for this lease payment of 1,20,000. Next problem also is same. Annual lease rent 40,000, lease period 5 years, guaranteed residual value 14,000. I'll tell you one thing. See, guaranteed residual value, unguaranteed residual value. There are two components. Okay, this is from no, it is not video stack. Some host, some person who has the host control, by mistake, instead of closing it, they closed it for all. I am feeling so. I don't know. I don't know anyway. So guys, shall we continue? Shall we continue? Yes. Okay. Okay. So guaranteed residual value is something which is promised by lessee to lessor. So what is the nature? For lessee, this is obligation. For lessor, this is right. So what is this? This is promised by lessee to lessor. So if you understand the terminology properly, you'll understand the accounting easily. Guaranteed residual value. That means I'm telling you, hey, Kirti, give me your car. I'll use your car for 7 years and then I'll give it back to you. Then Kirti said, hey, Pavan, listen, today the car value is 10 lakhs. Okay. At the end of 7th year, when you give car, it should be at least of 3 lakh rupees value. If you do not put this condition, what happens, if I use asset rough and tough, because I know that anyway, asset is not my asset. Finally, I'll give this back to Kirti only. But it is harmful to Kirti. So what she does is she will write one clause at the end of 7th year, Pavan, when you are returning the asset, it should have 3 lakhs value. Pavan sir, what if when I'm giving car, the value is only 1 lakh? Both of us will go to Maruti True Value. In Maruti True Value, they'll tell the value of the asset is 1 lakh. Then Kirti will look like this to me. Ray, how much I told you? Ma'am, you said the 3 lakhs, ma'am. How much it is? 1 lakh. So what to do? Sorry, ma'am, I'll give 2 lakh rupees cash to you. This is the promise made by lessee to lessor. Now, on that day, 7th year end, I have given car to Kirti. Kirti said, hey, come with me. We'll go to Maruti True Value. So we went to Maruti True Value and that guy said, ma'am, it is 4 lakhs 25,000, ma'am. Now do you think Kirti will give 1 lakh 25,000 to me? Not promised by lessee, but excess value of the asset enjoyed by lessor. So for lessee, there is no obligation. Lessor, enjoy.com. That is the reason this is not considered in accounting in the books of lessee. This is considered only for accounting in the books of lessor because lessee has no obligation towards it. So I don't have any right or any obligation on that. Over and above 3 lakhs, 1 lakh 25,000 extra value of the asset is there. No, that is not guaranteed residual value by me. Somehow lessor is lucky and he got it. This is the reason lessee accounting consider only guaranteed residual value since he has obligation. Lessor accounting consider both guaranteed residual value plus unguaranteed residual value since he has right on both of them. Don't you think standard is easy when you have common sense? Or rather, when you have clarity on the concepts. Okay. So this is also same. They have given lease payments. Now look here. The annual lease rent 40,000. They said lease period 5 years. Guaranteed residual value 14,000. Fair value at the beginning of lease 1,50,000. Implicit rate of interest 12.6. Present value factors are given. Show the journal entry. Here, unguaranteed residual value is not given. Even if it is given, you should not take it. Why? We are doing finance lease accounting in the books of lessee. For example, imagine here they have given unguaranteed residual value is equal to rupees 8,000. For example, they have given this also. They have given this also. Someone is saying zoom out, sir. Why? Which one to zoom out, Sai Prasanna? My face or Word document? Which one to zoom out? I don't know. Word document should be, that should fit to the screen, right? Chalo, anyway, so what are you supposed to do? That's fine. Okay, and someone is saying 120%. Okay, I have put 120%. Chalo, no problem. So what we do, we take 40,000, 40,000, 40,000, 40,000, 40,000, only guaranteed residual value here. Take discounting factor, multiply 1,49,888K. That means actually, technically, it is 1,50,000. So you can recognize 1,50,000, but ICA, 1,48,888. They said here, the fair value of lease is 1,50,000. Present value of lease payments also is 1,50,000 only. But rounding of difference came now. Rounding of difference. So they pass it to the journal entry, leasehold asset accountable to lessor. 149,888. Again, same. This is also lessor accounting. Now we'll see one lessee accounting. Oh, in the books of lessor accounting. Lessor accounting. Simple. I'll not explain anything. Straight we'll do one problem. 3 minutes rule I told you, no? Let us see you'll understand this or no. So Kirti, can you read this problem, please? Prakash Limited important model. Many times examination question is asked, calculate unearned finance income. Many times calculate unearned finance income. Today I'll show, oh, sorry, Kirti. You said you are in library. No, someone else. Yoshna, someone, can you please read this question?
Yes.
Read.
Prakash Limited leased the machine to Badal Limited on the following terms. Fair value of the machine, 48 lakhs. Lease term, 5 years. Lease rental per annum, 8 lakhs. Guaranteed residual value, 1,60,000. Expected residual value, 3 lakhs. Internal rate of return, 15%. Discounted rates from the first year to the 5th year are 0.8696, 0.7561, 0.6575, 0.5718, and 0.4972 respectively. A certain unearned finance income.
So can you tell me, is there any unguaranteed residual value in the problem?
Expected residual value minus 1 guaranteed residual value will become unguaranteed residual value.
Yes. How much it is?
1.4.
Excellent. So now guys, look here how simple the problem is. I'll tell you in financial management terms so that you can easily understand it. So what we are doing here is take year, cash flows, discount factor at IRR rate, whatever is given percentage, discounted cash flows. So year 1, 2, 3, 4, 5 years. Okay. Then lease rent per annum is 8. So how much of cash you get? 8 lakhs, 8 lakhs, 8 lakhs, 8 lakhs, 8 lakhs. And at the end of 5th year, will you get guaranteed residual value? Yes, sir. 1.6. Will you get unguaranteed residual value? Yes. Lessor accounting. Take both. This also comes in fifth year. This also comes in fifth year. Now take discount rates. Take discount rates. What is discount rate? 15%. So they said 0.8696, 0.8696. Then discount factor 0.7561. Then 0.6575. Then 0.5718. Last year, 0.4972, 0.4972. Please make a note of it that you will take only these two numbers again, and you will not take, again next year, because all these three numbers are fifth year only. Okay. If it is the FM, I'll tell you, you would have added residual value to last year cash flow, no? Capital budgeting. So instead of 8, you would have put, but because it is advanced accounting, AS 19 will show guaranteed residual value separately, unguaranteed residual value separately, mathematically, which is same. So now you multiply this into this, and then add this is equal to sum of. Okay, now add this also. Now, guys, all of you, do you understand this table? Do you understand this table? Now, these are called minimum lease payment plus. I'll write in the next column. Minimum lease payment plus unguaranteed residual value. Whereas minimum lease payment is equal to lease rentals plus guaranteed residual value. So this column is lease rents plus guaranteed residual value plus unguaranteed residual value. This you understand. That is what this is. No, this is component 1. This is component 2. This is component 3. All these three put together is called gross investment in lease. Gross investment in lease. So what is gross investment in lease? If you read 2 pages theory, you'll understand. Oh, gross investment in lease is the sum of lease rents plus guaranteed residual value plus unguaranteed residual value. Okay. Banana. Everything is cash flow for lessor. Come on. So you are putting cash flows here. This is called gross investment in lease. Now they'll tell you net investment in lease is the present value of the minimum lease payments plus present value of the unguaranteed. Banana. This is net investment. So take this, apply discount factor, it will become net investment. So net investment is this. So this is net investment in lease. This is gross investment in lease. Difference between these two is unearned finance income. Khatam. That's all, ladies and gentlemen. Answer is over. But first, if you read the theory, no, they will give you in a way that you will be shit scared to understand what is lease, what is guaranteed residual value, unguaranteed residual value, gross investment in lease, net investment in lease, unearned finance. Banana. How simple life is. That's all. Now you look at ICI answer. So finally, what they get to see, what they have done. Whatever they have done, finally they said 43 lakhs here. They calculated some shit. After that, the year 46 lakhs came. Here 28 lakhs 30 came. Here 14 lakhs 16,000 came. 1 year financing. Leo is saying, I can't believe it is so simple. Yeah, obviously, Deepak is saying I was fooled by ICI throughout. This is what the answer is. So, ladies and gentlemen, this is accounting standards revision. So I think we are done for the day. What do you say?